So let's start with quick intros for each of you, and then we'll dive into the discussion of representing real estate investors at scale.
I'm Josh DeShong. I have been in the real estate space for about 20 years. I founded a couple different companies. One was a brokerage team that represents institutions. The other is an online marketplace for investment properties called Trelly. And finally, Myers Home Buyers, which is a wholesaler, which is very reminiscent of the real estate agency business if done the right way. So yeah.
I'm Rob Chavez from Northern Virginia. I'm proud CEO of the CAZA Group. We are a diversified portfolio of real estate businesses that have construction, property management, 5 real estate teams, home buying business. And I think what I'm known for is I run the Grid Investor community, which is a community of 25,000 investors around the country that are agent-led. So it is the largest agent-led real estate investment community in the world.
Yes, and aside from that, this guy makes a mean ceviche. But it's on the topic of representing investors and kind of market dynamics that we've been seeing a lot of change in the industry. We've seen a lot of things changing and rapidly changing. And maybe we could start with you, Josh, to speak to this, but how are institutional investors changing in terms of where they're investing, regions, type of investments? Are they switching more from multifamily to something else? Or can you speak to a little bit about that?
Yeah, absolutely. This has actually been a really interesting period the last 2 years because I think all of what we thought funds would do was all theoretical up until recently. And one thing that funds, you have to remind yourself, a hedge fund or a private equity shop, their goal is to make a relatively modest return to keep up with inflation or beat it. Your mom and pop landlords, their goal is to pay for their retirement. Two very different objectives. But the big difference is the risk profile. Your hedge funds, your institutions, their risk profiles, they don't gamble. They like sure things, they like consistency, they want stability. And really the last 2 years has been a gamble. It's been a gamble in a lot of ways. And so what we found is, 3, 4 years ago, I would say the funds were neck and neck and oftentimes paying more than your mom and pop investors. But for the last 2 years, mom and pop investors have been buying more than the funds have. They've been more competitive. However, I will say I think it's mostly sentiment based, and I'm hearing and feeling rumblings of a change in the last 30 days. So,
And I know that you have invested a lot of foreign and institutional
yeah.
capital as well. So are they pulling out of America? Are they still going in America and just different strategies? Or
Yeah, foreign investment in the United States is increasing. So I'm glad you touched on that. But one of my specialties in the business was representing foreign institutions and individual investors. I've sold 7,000 homes or so to individuals all around the world that are not U.S. based, and I can tell you this is another thing that's living in the United States. It's easy to forget or to not realize how awesome this country is because it's all a matter of relative. Okay, how risky is the United States? Sounds risky right now, relative to somewhere else, and I think that's something that's really important.
I'm seeing a lot of diversification in the asset class with some of the institutional investors, right? We're seeing them trending to want to go to some of the markets that are outside the main markets, some of the tertiary markets, secondary markets, tertiary markets, and starting to look at different types of housing, right? Sober living homes, group homes. It's interesting. They've moved away from some of the traditional, and they're trying to find yield in some of these niches that are out there.
and so there's a lot of agents in the audience that probably would love to or aspire to represent these institutional investors at some point. What pointers do you guys have in terms of building that relationship or positioning yourself as that in-market person for an institutional investor to work with?
It's a phenomenal question. One is you need to understand, I say it as simple as I can, math. You need to understand return investment, return on invested capital, return on equity. You need to understand what cap rate means, yield, returns. If you can't speak that language, you're not even going to be able to get into the room really with these funds. I would say that's number one. I would also say focus. We we had a large consumer business, and we actually shuttered it to focus solely on institutions. So that is our specialty. We understand their problems. They have all kinds of problems with operations and getting things turned around. So we understand the problems those people face. Um, and then I just identifying who the decision makers are and working your way up through them, through there, building out the relationships.
Yeah, I find that they want the agent that's connected at the local level. They really value your resources, your people, and your specialized knowledge. So getting specialized knowledge in all of the markets and all the asset classes in that market makes you valuable. And so you just got to know the language, and then you need to show that you're an expert at something and that you have a network that they can tap into so that they can enter into a market quickly.
Yeah, I when I started working with foreign, I just want to add on to that. It's like when I started working with foreign investors, they because I knew what I was talking about in terms of risk and return and whatnot, it was literally like, here's all of our business. And it was honestly when it first happened, the first big client we ever got, it was too good to be true. And it was like, this doesn't make any sense. But what I found out was they had met with over 40 different brokers and agents, and none of them knew the investment game. And this was back in 2016. None of them knew the investment game, and three of them told them to talk to me.
Right place, right time as well, right? Um, well, thank you for that. And so now I want to kind of pivot this conversation a little bit in terms of support. You know, Rob, you have one of the largest investor network meetup groups in the country. So tell us a little bit about that, and how did you go from one little meetup group of 10 people to scaling nationally, and how does your community support investors and agents to grow?
Yeah, Josh, taking a little bit about this. Agents learn how to sell houses or with a buyer or sell it with tradition. When we saw this guy where um, they didn't understand the investments, they didn't understand the language, and so we started providing these investment meetings. And it was interesting. I found that like a meeting would have maybe 150 to people like this in the room, but 30% of the room were agents wanting to learn how to invest in real estate. So we started creating certification courses to help agents understand how to work with the investor. And if anybody was ever been part of a real estate investment community, what's really cool about it is that the wholesaler needs the rehabber needs the contractor needs, money. Everybody needs money, right? So it's this natural ecosystem. But I started building out that one of the rules that you talked about. People from other markets started approaching and saying, dude, this is awesome. Can we do this in my pocket? And at first I just turned people away. I was like, money, I can't help you. And then I looked at the CrossFit model. And then if you look at the CrossFit model, what they've done is they actually license the way they operate their CrossFit box. And I was like, well, why don't we just license how we run this meeting and the culture and the value and the ethos of it? And then you give it as a tool to the real estate agent so that they can go build a community at the local lane, so that they can attract investment dollars and deals and listings and buyers. And it just worked. Like every year, I'll do a couple $1 million for one night out of one of my team just from running a low real estate investment community. And we got 40 of those in the country. So, one in Miami yet? Not yet, but we're done.
So, um, if someone wants to get more information about setting that up or doing that here in Miami, how will they find?
They just go to gridinvestor.com.
Wonderful. So, Josh, I know that you are a big advocate of tech and data and using it together to find, and
Sometimes to a fault.
to this will fall direct to find deals. Tell us a little bit about how the acquisition landscape has changed with technology over the years, and is that kind of what led you to want to start Charlie?
or what was the idea behind starting with Trello? And by the way, Trello is a two-sided marketplace that connects investors and wholesalers. Much easier process than going to the courthouse for fighting
Yeah.
bills. Yeah.
It's Trelly is what we like to think. It's an alternative MLS, secondary MLS, but for investors, it's a much faster process. Most of the homes on the Trelly platform are sold kind of an auction style, so highest and best offer after day, and there's on average about eight, well, different investors that are bidding against each other. I would say there's and the answer to this could be a 4 hour long firm to the answer. I think that if you're not using a technology, if you're not analyzing your data, storing your data properly, you will not be able to make enough. You will not be able to be competitive enough to compete and build margins back in. All the competitors are getting margin with data. Back in the day, I was the only one doing data. Data was not very common. Unfortunately for me, now it is. So I think what that's done though is it's made our industry expand, right? So just like for Rob, his community he's growing it because uh, more and more people are getting access to this data. They're realizing the opportunities. Hey, all of these properties are selling off market. Hey, there's 10 rental properties on my street. They're seeing more and more and more of what's going on. And so it's causing the industry to expand. Our thing for Trelly was we thought it was the next evolutionary step in the wholesale space. It's very much a wild, wild west, and we think that it's going to evolve into something that's commonly acceptable, similar to the way real estate agents evolved.
And so looking ahead right now, and I know both of you have an interesting background. Rob, you were kind of like doing all the short sales kings, and you represented Fannie Mae and Freddie Mac on a large scale. And despite what's happening this week with elections and everyone's very gung ho, if you're looking at the data, we still are. All the signals are pointing towards an economic downturn, and a slowdown with consumer spending and debt levels are high. What are your, I guess, forecasts for the upcoming year of what could be distressed seller activity ahead?
We have a company advance next week, and pretty much the message is going to be we're going to enter into the market with a lot of cash offer to generate more listings, because we understand that there's not going to be a lot of foreclosures because there's a lot of equity, but there's going to be a lot of people missing payments. And so we want to catch them with an offer that they're going to resonate with, right? Get a cash offer now, or start with a cash offer. So our loafer making an offer for immediate response is going to be that. It'll be our main lead gen driver for 2025 and beyond, right? So we're changing everything in anticipation of that happening. And we know that we'll capture market share. We'll get our unfair share of the market with that message. And really what we've done, we've told everybody on the team, they're pretty much listing agents, right? Josh and I were talking about the lines between investor and agent are really blurring. And so the agent needs to understand that game, the investment game. And, he understands the agent game because he ran his own brokerage, but they're blurring. And so as agents, you have to understand how to play the other side of the game. And I always affectionately say, then your training is complete. Your Jedi Knight training is complete when you understand the retail side and the investment side.
I think so I actually don't believe the market's going to be bad. So contrary to popular belief, from my perspective, yes, there's some bad data, but if you look at it as a percentage and relative to other periods of time, most of the data that's being reported is it's within a threshold of reasonable, which sounds wild. I actually think this is the end of what I call a transaction volume recession. We've been in some markets over 40% down over annual sales volume the last 12 months. So that's really, really rare. Like for us to do as few real estate transactions in this country relative to our population, it doesn't really make sense. I don't think it's something that we can hold on to forever. I don't think we can stay put in our houses. And I do not believe that. I think by February the market starts to show positive signs of growth again. I don't know about pricing, but sales and transactions, I'm pretty confident on that.
Well, that's something I think everyone wanted to hear. So,
Yeah, and I think I agree with Josh. I think the market's going to be good. I do think though that there's going to be people that are going to fall behind on their mortgage, and that just creates an opportunity to help people out of difficult situations. We won't have to do the foreclosures. We won't have to do the workouts like we did in 2008 and on all the short sales. But we're going to get much needed inventory into the market. Now, it sounds like Florida's got some inventory, right? Compared to, I mean, we have like less than 30 days in Virginia still. So it's tight in our market. So I'm looking forward to more inventory.
yeah.
And so I want to open up for the audience if you guys have any questions in terms of how to represent institutional investors or even just how to get started. Don't be shy, raise your hand.
Not meeting the bus, but as much as I said, uncle, sitting uncle, or the was that? Oh, yes, pretty in that. I like that.
In the grid Facebook group. So is that what you?
I have a few high net worth friends that I would like to be able to speak the lingo with, but obviously I'm a little bit newer to real estate, about a year and a half, and I got 16 transactions, but it's awesome. Congrats sagging along, I'm trying to figure it out. So the lingo would be cool. I saw that, so I added myself to the Facebook group, trying to see if we could probably bring something to Brevard County. It's a up and coming county. I think it's the top 5 fastest growing county per capita in the nation.
I think you nailed it. It's just going in and listening to the lingo and participating in the conversation, joining a local, real estate investment group in your area will also get you exposure. You'll start building your network of investors like mom and pop investors. And what's interesting is in those rooms, you're going to find a lot of money, and you will find institutional investors like scouting out the market as well in those rooms. And so just put yourself in the place where they congregate, and they're congregating online in Facebook groups like the one we have, but also locally, just in your backyard. And yes, we'd love to have a grid in Broward and in Miami. And okay.
Perfect. I think we have time for just one more question. I think you had your hand up, right? Yes.
I wanted to ask you what are the metrics that you're primarily today your clients looking for? Are they looking more for a cash and cash return, or are they looking more into the appreciation or the IRR, which considers both? Like, what would be the main metrics? Is it like ROE or return on asset, IRR? If you can please elaborate on that one.
A lot of my investors, Lee does more of the institutional stuff, but a lot of my investors are looking for cash on cash return. So that's the big one. It's been hard to get that yield in our market. So you start seeing a lot of those investors going after and buying sub twos, buying properties subject to the existing financing that's there to get that yield. But cash on cash is what they're typically looking at.
For us, we have like a pendulum, and it goes back and forth between your short term and your long term investors. I would say right now we're on the short term. Most of the properties we're selling to real estate investors are flips. There's a few flip funds, but just disclaimer, I don't know of any legitimate ones. Just a heads up. I know there's a lot of people who pulled their money together, but a fund is usually $100 million or more in investable assets. It's called a QIB. Flipping funds and flippers are the most active right this second. However, the landlords we have, they're not selling their houses, so they're not getting a high ROE right now. But they're holding because I think there's this hypothesis that yields and returns that are paid on any investment are forever going to be lower now that it's been effectively democratized, right? We all know about rental real estate, and even if you weren't in real estate, you would know about it more than you did 10 years ago because it's becoming more and more common. So I don't know that you're going to see massive outsized returns anymore like you used to, but I think people are realizing like, hey, if I sell this house, sure, it's only bringing a 4% net return annually, but I may not be able to buy another one. I may not be able to get a 3.5% return, right? So I think you're seeing a little bit of both, but the landlords are a little more on the sidelines right now, but I don't anticipate that to last very long.
Thank you. Wonderful. Great. Thank you, gentlemen, so much. Big round of applause for these guys.
Thank you.